Spanish banking system, before any sort of crisis, has always been some sort of a healthy and strong financial system. Very important for the economy, with some international exposure. That is not necessarily the case in other countries, unfortunately, or just by reasons of the sheer size of the economy itself. So I think that the good banks, or the strong banks, were already in a position that they could take care of some ailing banks. In the beginning, the most important thing to basically single out was, or to point out, was the identification of one of the problems, not necessarily all of it, but one of the problems. Once it was identified that the real estate financing market was creating some sort of noise in the whole financial system, then the problem was isolated, and then a solution was meant to go after that to solve the problem. So basically, trying to do it at once, trying to do it in one shot, and trying to do it basically in a sort of an isolated model that made, or was the reason to create SAREB, as, if I may say, the lame duck, where all sorts of problems were to go into. And that enabled the rest of the system to basically keep it alive, to make sure that the ailing institutions at the time were in a position such that they could merge with others and they generate the interest of other non-ailing institutions, and therefore the financial flow will continue flowing. And that was the key to it. In order to get there, there was a number of different sort of moves early on, which are some of the things that should be taken into consideration when looking into a European sort of wide approach, is that a previous consolidation of the banking industry on the whole was taking place already. Otherwise, it would have been probably almost impossible to deal with the situation. We have to go back and remember that the main or the mandate of SAREB, or the main task of SAREB, was a sort of the task assigned to a resolution company. So number one was not making money or even disposing of the assets in a certain pace, or a certain pace within the time frame that we have been given, but not necessarily trying to be ruled by the same sort of guidance that a private company normally is. So profits are always important if we are able to make it great, but it was not the number one objective of the company. That was to be a partial solution to a very deep problem at the time. And in that sense, I believe that the fact that the Spanish financial system is in good health today, although obviously plenty of challenges as everyone else, means that our target or our objective was at least in our part addressed and taken care of. Obviously with lots of improvements to be possible, and us working our best at doing so. Yeah, I would say that having disposed of something like 13 billion of non-performing assets, and in this period of time until last year's end, and therefore repaying debt for a similar amount, debt that is guaranteed by the Spanish Treasury and therefore is part of the national budget and good for all of us. I wouldn't qualify that as a humongous or Heraclean task, but it's something I believe significant. We first had to start up a company, and all the infrastructure wasn't there. I mean, it was done overnight. It was an inheritance coming onto us eventually, overnight, the whole thing. So it was 51 billion in assets, 51 billion in debt, and that was done like this. This is, I mean, to put it in perspective, or in a sort of a comparison, I would dare to say that it's probably the most or the largest sort of toxic startup company that you have ever heard of. And the reason for that is that, in any startup company, you normally go from scratch, and day after day you do your business, you grab your clients, you get your revenues and stuff like that. And here everything was done on day one. But the quality of the assets was not the quality that you will go for. So I think that bearing in mind what we've done before, until now, bearing in mind where we are now, that we are in the midst of our life, if you wish, one could say that the company normally lasts for 30, 40 years. We're going to last 15, which means that our years are three times the years of a normal company. So each year in SAREB is like 3 years in a normal company. which means that we have to go we got to go fast, and that changes our life speed and everything else we do. We do believe that from our learning curve until now, and what the belief that the kind of things that we are setting up, we can continue to deliver the fruit of our task, that we can comply with our mandate and fulfill the commitment that we have with everybody in our country and in the European community. And then we move into the straight on where the social eye happens to be these days, which is how can we help to nationwide problems. And one of the problems that Spain continues to have, or the weaknesses, if you wish, that Spain continues to have, is through the fact of unemployment in the crisis times. There are lots of people which continue to be homeless, but nevertheless, the fact that we do have assets for a long period of time enables us to put some of those assets, whenever it makes sense on social terms, put those assets at the disposal and at the use of people, families throughout Spain that do need that housing. And this is what we are doing. We do it on our own, outside of any government or any other sort of banking social programs. We have been doing it for a number of years. It has been approved by our board. And we have at this point in time 4,000 houses that are allowed to go into that type of what we call affordable housing programs. 3,000 of them are already being disposed of or displayed and are being used by 6,000 people. That is difficult to calculate the accurate number, but 6,000 people comes from 3,000 houses, 2 people a house, basically, throughout the country. We have agreements with 11 regional governments throughout Spain, and a number of city halls or municipalities in Spain as well. And we continue to, it's an open program, so we will continue deploying that as we go. This is a very difficult and is irrelevant to quantify it economically, but does have an impact. And it generates for us lots of goodwill, if you wish, in a company that by virtue of its birth and in being born in the world of toxicity, doesn't make you look good upfront. By doing this and helping with a little, I mean obviously a drop in the ocean, we think that we are doing our fair share as well. The SAREB experience or the NAMA experience or some other experiences were at a different time or a different point in time. The legislation was different and there was more help because of lack of probably specific regulation and because of the sheer size of the problem at the time. So now the sort of the little bags are more isolated and they are clearly identified with countries. At the time that we went through, obviously was Spain, was SAREB or was whatever, but the whole world was basically collapsing. So it's different. I mean, it's in the midst of a different situation overall. In the case of Europe, the European banking system, it would have helped a lot if the consolidation process had been taken care of before. Because if you look into what Spain is today, and Spain today is basically a 15-bank scenario compared to 50 plus or compared to 200 plus a number of years ago, and you put that in perspective with some of our right-hand neighbors, the sheer size of their economic or their banking system makes it difficult to get everybody in agreement to deal with. So that's has been, as far as I understand, the main challenge to keep on rolling. But even if you forget that, which is impossible to force now or to speed up consolidation, although it's happening, and it's happening in part because of NPLs, then you have to bear in mind that number 2 obstacle is the price of the transfer price. That is one of the problems that still is there and nobody knows really how to deal with. In any event, the European Central Bank and some other people are moving into probably the aftermath of the second step, if you are able to sort that one, which is how do you deal with creating a market that enables liquidity to come back to match the asset class that you are trying to basically attack or to solve. The asset class is NPLs, so are assets that are not generating any cash flows. So it's not like mortgage bonds or collateralized mortgage obligations, it's something different. But they are there, I mean, and they are there by the trillions or whatever the number you want to put on. So basically, you need to do something with it that those assets will generate some sort of flows or will generate some sort of capital gains in the future. These assets that we deal with have one main difficulty, which is the information on the assets that you have. So that information asymmetry between the assets and the investor's appetite, and which varies country to country, needs some sort of homogeneous treatment. This is something where blockchain could be of the essence going forward, but I don't want to get into that. But it could be, I mean, you need to basically give some trust to the whole process for investors to come back to this market. And the most important challenge that we as a company and as an asset management company have to deal with is, and I know the ECB makes an important point in this, is that we need to be companies that are fully transparent and fully easy accessible companies, so that people, if they want to buy from us, we have to make their life simple. And so far, we've been making their life, I don't know the other AMCs in Europe, but we've been making the life of our potential investors miserable. We're improving on that. We will be getting much better on that, but I mean, talking about experience and things that need to be improved on, transparency, meaning the ability of people to buy the assets from us, needs to be dealt with significantly. And this is because we don't have our own distribution network, so we use services, so it's not us. We don't have a branch network or anything that belongs to SAREB that could explain things. We don't have fully extensible systems, platforms and technology that can be deployed easily at the office of the final distributor, like it happens in other commodities or in other markets. And there's lots of things that we can improve upon, but certainly not the quality of the assets. The assets are there already. No? Demand keeps flowing. The tailwinds of the economy help obviously a lot, but it's not enough. It's not enough because not all we have is basically pegged to the evolution of the markets. I mean, when people think about us, our asset base always thinks about the real estate part, but they forget about the loan part. And the loan part has nothing to do with the real estate, the fancy things that you see in the papers. No? It's not housing here and housing there. It's loans coming from people that got already into trouble when we get in. So they were already non-performing loans, and they are more non-performing loans today than they were before. All the things that we've gotten are feasible. I think that we can do our task. The main challenge, beyond all the other things in the normal macroeconomic picture, is the keeping talent of the people that we are working in the company. The fact that you have a company that has an expiry date is something unusual. It's one of the unusual characteristics of an AMC like us. The other one is basically that you basically have to go taking your balance sheet down. So basically you go decreasing your size instead of increasing your revenue or your business, which is something that normal companies work for. No? So we have to, our success will be in disappearing, which is something quite special. The other one is that that we have an expiry date. We are just like one of these milk containers or bottles that says this product is going to expire on November 27, 2027, which is something different. And with that, and with the lack of, I mean, a very focused business, a very focused geographical business, so it's not outside of Spain, it's Spain, and it's real estate related development finance, makes it somehow special when you go and look for talent in the outside market. So when the markets boom in terms of real estate or in terms of financial things and all that, I mean, the SAREB turns to be probably the best master degree or business school that you can imagine. Because, I mean, here, each of us deals with an amount of assets on a daily basis that is probably, what, 10 million each of us, or what, put in the number you want, 20 million, depending on the time that you're referring to, because we have 39 billion in assets still today. And we have to do things every day, because otherwise, I mean, this is like one of these, I don't remember the hummingbird, no? It's not the colibri, which basically is like this in the photos, and it can't stop. I mean, if it stops, it falls down. It's like us. No? We have to keep on moving and doing something that is part of our life cycle. No? And that makes people management and talent gathering, and not in the first years, because we were held by the crisis and held by the fashion of the vehicle. But as we get to the end of it, it will be more difficult, and we will continue to need good people, even until the very last day.